So I've been on the hunt lately to find some hidden gems in the stock market to buy on this dip. I've been taking more of a long-term approach on crypto, so I'll be much slower with that side of content, and I apologize in advance if that pisses you off. But I do think the opportunity right now is with high growth stocks that have been battered lately, because they're gonna bounce eventually, and if not already, and they're gonna bounce hard. One of those stocks is GLBE, or Global E Online, which we're going to take a look at today. It was actually on my radar for quite some time, but it recently popped up because as I'm looking for fulfillment centers for a separate project that I'm working on e-commerce side, I was looking for global shipping solutions, and Global E Online came up as one of them. In fact, the other one out of 4 that came up was Flow.io, which was also recently acquired by Global E Online. So this was definitely something interesting that popped up, and I just had to take a look at it. So let's take a look at it and understand whether this has the potential to be the next Shopify. Hey everyone, my name is Bill Hawk, and on this channel we talk about stocks, crypto, real estate, and anything relating to making money and investing. If you're new here, all that I ask in return is please hit the like button and subscribe. Well, I ask you that even if you're a returning viewer, obviously. And also join the Discord and newsletter below if you're interested in this stuff and having this conversation and you're just about that life. GLBE's mission statement, as stated on its F1, is to make global e-commerce border agnostic. So in normal terms, it's basically a platform that allows merchants to access international e-commerce sales without the friction of currency, banking, import duties, customer service, fulfillment, etc. It also allows international customers to shop much easier without surprise duties and whatnot. You've likely experienced this from the consumer side, but I can tell you also from the business side, it's a pain in the ass to try to ship internationally, and often it's just not worth it because the sales volume isn't there, but volume is increasing internationally, and that's why we're having this conversation. The other reason why as an online store you'd prefer something like Global E is you'd get increased conversions, which comes because of localized pricing, checkout, shipping options, and payment options like Alipay or WeChat Pay, for example, and even customer service. Global E has already partnered with pretty large e-commerce players, including Forever 21, Harvey Nichols, and they recently signed up the LVMH group, which includes Sephora Asia. There are a lot of strategic partnerships, including one with Facebook, and more importantly, with Shopify. Shopify acquired an interest in the company that is worth about 5.5% of it, but it also holds additional warrants for 11.85 million shares. Over the next 2 years, this could bring Shopify's stake in the company to nearly 500 million at current prices. Global E is founder-led, which is always a good thing. It was founded in 2013 by Amir Slachet, Sahar Tamari, and Nir Debi. It's an Israeli company. Stalking their LinkedIn profiles, it seems like they have technology backgrounds, but this is their first entrepreneurial venture. But with investors like Shopify backing them, it's a bit more comforting. The Israeli tech scene is probably still underrated. There's a lot going on there, and I just wouldn't let this slip below my radar. Since they've been founded, they've launched in several countries and achieved impressive gross merchandise value, or GMV, growth up until their IPO on the NASDAQ just last year. In terms of KPIs, they look at net dollar retention, which measures customer stickiness, which has been consistently above 100%. But the one I'm more concerned about for the purposes of forecasting revenue is gross merchandise value, or GMV, which is consistent with our measure for Shopify and forecasting their growth, which, by the way, if you haven't checked out the video, make sure you do, because it's worthwhile to allow us to compare the two. So in terms of GMV, Global E grew at about 100% in 2020, and I'm forecasting them to have grown about 50% in 2021. So that being said, let's take a look into their valuation. But before we do that, I think it's worthwhile for you to understand the breakdown of revenues, because although they report in one segment, they actually receive the revenues from 2 different streams. So one being service fees for transactions taking place on their platform, for which they obviously receive a fee, and fulfillment fees for shipping goods to end consumers on behalf of merchants. And as you can see here, their service fees have been increasing, which is what I would like to see, because obviously it's a much higher margin business than just fulfillment, and I'm quite honestly just not interested in investing into a fulfillment business. That's not what I'm looking for. I'm actually looking for a tech company. So as always, this valuation spreadsheet is available to members of my email list and Discord. The link is in the description. I highly recommend you sign up because it allows us to obviously have conversation around the valuation should you choose to do that. But it also allows you to make your own assumptions, and especially with something like GLBE, is very sensitive to our assumptions because there's a lot of uncertainty, which you'll see now. So anyways, as with Shopify, we started by analyzing the GMV and then forecasting its growth based on the historical growth rate. But I also looked at Shopify's GMV growth and compared it to GLBE's historical growth rate in GMV and assigned a multiple. So in this case, historically, GLBE's growth rate in GMV has been 25% higher than Shopify's, which makes sense because it's a much smaller company. But I think that's also very conservative, because if we take a look at the third quarter of 2021, 86% growth in GMV for GLBE, whereas with Shopify, where you can see here in our valuation spreadsheet for Shopify, 35% growth in GMV in the third quarter of 2021. So that's like a 2.5 times multiple. In that case, GLBE grew much faster, and that's why I had my concerns with Shopify's growth. So I still didn't feel comfortable obviously taking that bull case. I went with a more conservative 1.25 or 25% multiple on Shopify's growth rate, which gave us the growth rates over here to forecast the GMV growth up until 2024. So I think this is probably a more conservative scenario, which then allowed us to forecast revenues at 17% of the GMV, which is consistent with history. And we took a look at historical margins and assumed some sort of margin expansion to come up with certain valuation metrics like a forecasted PE and PS based on current Shopify multiples. And we took an average of the price to earnings and price to sales and got a price target of about $50, which is a 40% upside from here. So I understand that there's a lot of assumptions here and you may not agree, which is why I highly recommend you sign up to the email list in Discord so you can take your own valuation and make your own model, but this is obviously a good start. But I took this a little further, which I usually try to do, and derived a DCF model, which is part of this. And you can see here, I got a DCF or discounted cash flow in an intrinsic value of $85 per share. That might sound high, and it probably is. I compared it with $30 on Finbox, $30 on Simply Wall Street, and $60 at Morningstar. But this only means that GLBE is either trading at or below fair value, which is not bad at all, especially when you compare it to Shopify's fair value. So I think it's, in that case, a much better buy. And then we take the forecasted price to free cash flow and sales and earnings multiples and try to assume again some normalization as we did over here. And we factor that in all as part of a multiple and get a price target of $40, where it's currently trading at about 37. So obviously not much upside there, but that's with that bearish or base case assumption. Should we take that multiple from 1.25 to, let's say, the more recent multiple, which was 2.5, and let's just say 2, let's just do 2 here, a 2x multiple on Shopify's GMV growth rate, then that changes the number. You get $80 as a price target here and $65 as a price target here. So there's definitely, again, a lot of assumptions, but there is upside here. It is a profitable company. It's something worth considering. I wouldn't just call this junk. When you take a look at international e-commerce growth, you can see that there is actually a lot of growth here outside of North America. And in fact, the highest growth rates are in China right now, but unfortunately, I don't think GLBE has a solution for China, where Tmall is the dominant competitor or dominant market player for cross-border shipping for brands. And I think, honestly, GLBE is probably not going to have a chance in breaking into that. But there is definitely growth outside of North America, which is fueling the growth of GLBE, again, to be higher than Shopify's, along with the fact that it's a smaller company, to justify that growth rate being much higher. Overall, to me personally, this is a pretty exciting company, and I do think there's potential to buy this dip here. Yes, there's concerns with e-commerce growth globally, but GLBE is clearly on the right side of that, given the fact that they're helping brands expand their borders and their audience and fueling growth further where there's challenges or concerns in that area. It's clearly already in bed with Shopify. I think that deal is already sealed. They acquired their probably only competitive threat, Flow.io, which allows them to now expand audiences and customers to reach small and medium-sized customers as well as large customers. I think honestly it's a better opportunity than Shopify, although the risk reward is much different. This is a much riskier play, which would be reflected in my capital allocation. I would allocate a smaller amount of capital here and maybe look at a hedging opportunity with Shopify or maybe ARC. I hate to say that, but this isn't your just average ARC name and classified as an unprofitable company trading on a multiple of sales. It's profitable, and there's definitely future here. It's a quality name, and it's just been beaten up a lot, so it's worth it. I think the risk reward honestly just makes sense, and it is attractive to me. With that being said, if you have any questions, please leave them in the comments. Let me know your thoughts. Are you investing? I would probably wait for a red day. I wouldn't chase a green candlestick, obviously, which we're seeing today. I think this is definitely something that you would want to have a long-term approach with, and it can be a potential multi-bagger for the long term. So yeah, that being said, again, please like the video, subscribe to the video, and I hope to see you on the next one. Thank you for watching.